When you think of accounting and finance, what comes to mind? Don't worry, this is not my course. I have something just a little more special planned for you. Do you want to learn about accounting and finance in a way that you've never been taught before? Of course you do. My visual approach will teach you everything you need to know, and it will be a lot of fun. In fact, you'll wonder why you weren't taught this way in school. Oh, and if you get a moment, please check out the student reviews to see how so many people have enjoyed the learning experience. And you know what the best part is? No experience is necessary to take this course. So if you don't know how to model and value a company, analyze a cash flow statement, or understand the difference between growth and value investing, not to worry. We will cover all of those concepts from scratch. So why should you learn accounting and finance from me? I have an MBA in finance from Columbia University. But more importantly, I have work experience in the real world, from Goldman Sachs to several hedge funds, to venture capital and consulting firms. I've raised and managed over $1 billion in my career. Now I'm passionate about sharing my knowledge and experience. My life has turned full circle, from my own education to my experience in business, to investing in and founding several companies. Instead of teaching boring finance and accounting theory, I teach based on my own real-life practical experience, and it has led me right here to you. I want you to understand how to create, analyze, and forecast an income statement, a balance sheet, and a cash flow statement. I want you to thoroughly understand and enjoy finance and accounting so that you can be inspired to achieve all of your career goals. I have the tools needed to get the job done. So let's do it. I'll see you in class. Good morning, good afternoon, or good evening, and welcome to our 218th weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. And so the way this call works is this is an AMA like you see on Reddit, meaning ask me anything. You can ask me business questions, you can ask me career questions, investing questions, anything you want. And my goal is to humbly help you take your career to the next level. So without further ado, let's begin, and thank you. All right, first up, I have got Ginny. How are you? Ginny graduated from my Platinum program a couple years ago. Great to see you. And thank you for all the messages you left on LinkedIn as well. And your new profile picture looks amazing too. Okay, next up, Digital Edwin wrote, hello everyone. Digital Edwin from Nairobi, Kenya. Hope you're doing well. Great to see you. And the next place we're building a school is going to be in Kenya. I use the profits from what I do to build schools all over the world. And so we're finished our first one in Rwanda. I went there in the summer of 2021 to visit with one of my students named Vital, great guy. And I'm actually going there again this summer in June or July. And I'll be doing my weekly webcast 1 week from the school in Rwanda. Okay. Next up, JM wrote, can you please explain the difference between earnings and cash flow and free cash flow? Should you emphasize one over the other? Absolutely. Okay, so there's three different financial statements we look at. One is called the income statement, which tells you how much money you're making. Then you got the balance sheet, which tells you what you own and what you owe. Then you've got the cash flow statement, which kind of corrects the income statement. Because the income statement is kind of like a lie. That's a weird thing to say, but net income on the income statement doesn't mean how much more cash you're getting in your pocket, because it involves and includes a lot of non-cash items like depreciation, which is funny money, kind of like when you see a monopoly. It's not real money. And so the role of the cash flow statement is to correct the income statement and tell you how much cash you're getting in your pocket. And the cash flow statement is linked to the balance sheet, because if you look at the difference in cash balance between the previous balance sheet and the current one, that's what cash flow, that's what the cash flow statement shows you as well. So all three are connected that way. And the income statement is connected to the balance sheet because in the equity section of the balance sheet, you've got something called retained earnings, which basically means net income less dividends. So cash flow is how much you're getting in your pocket. Now, free cash flow is something that investment bankers use and something I teach a lot about in my MBA degree program, when you're trying to value a company based on a valuation methodology called discounted cash flow. And free cash flow is the first part of the cash flow statement, which is cash flow from operations, minus CapEx, meaning how much money you spent on equipment and stuff investing in your business. If you have additional questions, please let me know. Now, the fact that interest rates are going up make a lot of companies not as valuable when you're doing a discounted cash flow analysis, because what you do when you're forecasting cash flows into the future to value a company, what you're doing is you take the future cash flows and you discount it using the current interest rate plus some other risk management metrics. So as interest rates go up, as you discount future cash flows, the value of the company that you're trying to invest in or value goes down. Okay. All right. In terms of which one to emphasize the most, I would say cash flow. Absolutely cash flow of the three. Net income is not really how much cash you get in your pocket. So I would look closely at cash flow. And I'm actually writing a book on this topic. McGraw-Hill, I just signed a contract with them. They have something called the Essential Series. And these are a couple of the ones that are out already, published by other authors. And so I have one called Finance Essentials for non-finance professionals. And that will be out later on this year through McGraw-Hill. Great partner of mine. Okay, cool. All right. Manas, how are you? Good morning. Great to see you as well from India. And then we have Ake, first time I've seen you on the call. Hope you join us again. Who wrote, hey, Chris, I'm working on a blockchain DeFi project, decentralized finance. Okay. And the idea is amazing as nobody has worked on it. But the thing is, I'm still in college and it's difficult for me to find students. Yeah. So, and that's part one of two. And then part two, you wrote, it's difficult for me to find students with the same interest as me. I'm unable to connect with people online. I want to connect with somebody from the United States as they might have better information about the US market. I'm also planning to move there. Cool. Excellent. So what I recommend doing, and all my questions I try to answer generically to apply to everybody, what I recommend doing is going to a website called Meetup. And this is a great way for everybody to network as well. Doesn't matter where you're located. So I'll show you. So let's go here to, new tab here, Meetup. Okay. And this is a free website you can use to join meetings anywhere in the world, in person or online. So let's just say that you mentioned you want to move to the United States. Let's just say you want to go to Boston. Okay. Actually, I'll put Boston here. Okay. And then here we'll go blockchain. Blockchain. Try again. It's fun doing these things live. Here we go, in Boston. And you do a search. I wonder why it's not working for me. Okay, it says New York here, but if you went back and you type Boston, it should work. And these are events that you can attend for free, either in person or you can do it via Zoom. So this one here is a New York City blockchain networking event, which 110 people are going to. You can go to most of these events for free. Just click here. This works in every city of the world for every topic as well. It's a great way for you to network, to meet potential employers, potential investors, potential business partners, etc. Okay. All right. Next up, JM wrote, what is a typical day like for a hedge fund manager? What would they read, watch, etc.? Yeah. So the way that most hedge funds work, and I've worked at a couple of them, is you have a morning meeting. So when I worked at a big hedge fund called Citadel, I worked out here on the West Coast. Our morning meeting would start at 5 a.m. Pacific time, which is 8 a.m. New York time. And what we would do is we would talk about all the events that occurred overnight that might influence the U.S. markets, which open at 9:30 a.m. New York time. And those events could be some kind of an announcement from a semiconductor company in Taiwan, for example, or motherboard companies in Asia in general that could impact technology stocks. I invested in tech stocks when I worked in the hedge fund industry. What we also do in that morning meeting is we discuss all the sell side research that came out. For example, Goldman Sachs just hypothetically, Goldman Sachs just upgraded Intel from a neutral to a buy rating because of these factors, yada, yada, yada. And then what happens is each analyst around the table will talk about their sector. I covered software and internet stocks, and so I would talk about software developments that occurred. If Microsoft reported earnings the night before, I would talk about how great or how awful or neutral Microsoft's earnings were and what the potential impact would be on others. I might also talk about Amazon. So Amazon reported earnings recently, actually, and they had the lowest year-over-year growth for the fiscal year in the history of the company at 9% revenue growth, which is true. But their Amazon Web Services division grew quickly. And so did their advertising business, which is $11.5 billion. A lot of people don't realize Amazon makes a fortune with advertising. Then after I, the software or internet, whatever analyst, would finish talking about that, we'd move on to the semiconductor analyst, then the PC analyst, then the networking analyst, etc. And if you work at a diversified hedge fund that covers many different subsectors, not just tech, you'd have the industrials portfolio manager talk, then the commodities, retail sector, etc. Then what happens is you kind of review more earnings releases released before the market open, if applicable, and the night before, and you get ready for the market to open at 9:30 New York time, which is 6:30 a.m. on the West Coast where I live here. Then what happens is during the day, you'll watch your Bloomberg monitors, hopefully not too much, to see if any of the positions in your portfolio are going up or down too much. And then if there's weakness in a position that you want to add to, you'll buy more, etc. Now that's a typical day in the life, but there are also a lot of conferences that portfolio managers and analysts go to across the world, and I've gone to them all over the world. I've met with CEOs in many different countries of companies that I invested in, yada yada yada. And the bottom line is you're trying to get edge and alpha. Alpha means how much you outperform your benchmark, like the S&P 500 buy. Okay, and if you have follow-up questions about that, please let me know, and thank you. Okay, in terms of what they read, other stuff, they're usually more sophisticated. They really won't get swayed by watching CNBC and seeing what Jim Cramer has to say about stocks, hopefully, but they do their own research. The best ones are very long-term focused as well. They create financial models and they value companies based on a couple of different valuation methodologies, but they do their own research. Yeah, as I think all of us should as well. Never rely on what anybody tells you to buy or sell online, including me. Always do your own research because nobody's smarter than you. Okay. All right, next up we have Eric. Hey, Eric, how are you? Eric joined my gold program that started on January 30th recently. He wrote, what technologies will have the biggest impact on humanity in the decade ahead? So everybody is talking about artificial intelligence right now. And I think this is a great thing because it'll help us to get access to information much, much faster. And a lot of teachers in universities are upset with ChatGPT. And these are the same teachers that were probably upset when Google was first released to the public in 1999. But I say it's a good thing because we can get access to information faster and focus on other things in life. Now, the problem with ChatGPT is that it's confidently wrong, right? There's a lot of mistakes with it, and the data is only up until 2021. And for those of you not familiar with ChatGPT, it's this not-for-profit company that was created in 2015. Elon Musk invested $1 billion, so did Microsoft, and it's taken the search engine market by storm. A lot of people think that Google is going to finally lose market share, which I hope happens because competition is good for the consumer. In fact, yesterday, Google had an analyst event, and they talked about their version of ChatGPT, which is called Bard, B-A-R-D. And they didn't really do a good job, and the stock pulled back materially because of that. Now, Satya Nadella who's the CEO of of Microsoft. He was interviewed by the Wall Street Journal earlier this week. I listened to the interview on the podcast, and he said that they're going to release their own version of ChatGPT into Bing very, very soon, and it might be a little bit better than ChatGPT because the problem with ChatGPT is that, again, it's confidently wrong, and the data is only accurate up to 2021. Microsoft's new offering of this product, a commensurate product, is going to be, the data is going to be, as of today, as accurate as possible. And also, the great thing about the new Bing version of ChatGPT they're releasing soon is when you use it, it will give you all the sources as well. Now, I've source checked a lot of the stuff in ChatGPT, and it's wrong. Again, it's confidently wrong. Yeah. Okay. So I would say AI is probably the best secular growth story right now in tech. Yeah. All right. Next up, Pramod wrote, what is your opinion about the Indian stock market? Yeah, I'm a big fan. You know, India is the biggest democracy in the world, the best friend of freedom. I've invested a lot in India. I've been there a number of times to invest. I particularly like the technology companies there, Satyam, Wipro, Infosys, etc. There's also a lot of great industrial companies that are growing quickly there, infrastructure companies like Crompton and Greaves, etc., and the many Tatas. So I am bullish, very bullish in the long run. In terms of near term, I can't call it, nobody can, because the market will stay irrational longer than we can stay solvent. I'm a long-term investor and I'm bullish on India. Yeah. Okay. All right. Next up, Manas, also from India, wrote, if a company has missed earnings from inception and has been on a loss streak for years, but it's growing, how should we analyze the stock prices on that? Yeah. So if they missed earnings, then structurally something is wrong, right? In which case the board will probably find a new management team to take over, or the stock will get crushed and somebody else might acquire the company. But if they don't have earnings for a couple of years, that's okay. Because a lot of growth investors love to invest in companies that are growing revenue very quickly, but are not profitable yet, but they will be in the future. Like Amazon, if they wanted to, could trade at 9 or 8 times earnings in a heartbeat if they got rid of all of their R&D projects, their salespeople, etc., and they stopped investing in places like Amazon Web Services or subsidiaries like AWS. But growth investors don't want that. They want the company to grow and to make a boatload of money in the future. And so the way to value a company that doesn't have earnings today is a couple ways. Number one, you can look at the price to revenue. Okay, so it's just kind of like PE, and always think of the denominator as being the number one. So price to revenue means for every $1 in revenue on the denominator, how much are investors willing to pay for that price of that company? And it all depends on the growth of that company as well as the market and the timing. For example, in 2012, I worked in the hedge fund industry and the venture capital industry. And I remember that I invested in 3 IPOs of cloud software companies that were not profitable. But the going rate at that time was between 15 and 20 times revenue. And those 3 companies that went public in 2012 were Splunk, ticker SPLK, ServiceNow, ticker NOW, and Workday, ticker WDAY. I met with the CEOs of all 3 companies and participated in all those 3 IPOs, but they weren't profitable. So again, the going rate at that point in time for those 3 companies was between 15 and 20 times revenue. Now that's one way to value a company. Another way to value an unprofitable company is to create a financial model and forecast what you think earnings are going to be in the future, meaning in 5 or 10 years. And then you value the company based on a PE multiple on your earnings estimates in 5 or 10 years. I teach that in my MBA degree program in a lot of detail. It's my favorite way to value companies. The third way to value a company that's not profitable is you build a discounted cash flow analysis, meaning you figure out how much cash you're going to make many years from now, and you discount that back into today's terms. The problem with DCF, or discounted cash flow, is quite often over 90% of that valuation is based on what's called the terminal value, which means between year 11 and infinity, for example. It's not very accurate. Okay. All right. Next up, Cheyenne wrote, hi, Chris. Hey, what are your thoughts on people wanting to set up informational meetings through Zoom calls in case they want to reach out to somebody who is further away from where they live? I think it's a great idea. You know, and it's a normal thing since the pandemic. You know, a lot of us conduct commerce over Zoom. So in one of my great students from my June class of last year, Emily, she once said, a great Zoom presence can do the same thing for your career, what an amazing Italian suit can do as well. So I would spend a lot of time focusing on having the best Zoom presence as possible, because you'll never get a second chance to make a first impression. That's a cheesy quote from a Head & Shoulders commercial from the 80s. I am that old. And in my MBA degree program, we actually teach you from scratch how to create a great web presence as well, or Zoom presence, using the equipment you have. One of my employees actually teaches you one-on-one that as well. And for those of you in the MBA degree program currently, that occurs in the 4th semester in the SMC track. That's Sales, Marketing, and Communications. Okay. All right. Next up, Ake wrote, I read your networking book, a great book, but do you think that LinkedIn is the best website to connect in 2023? I still do. I still do. The best investments you can make are in platforms where the users create the content. And LinkedIn is certainly the quintessential platform when it comes to networking and trying to get a job. And the book that Ake is referring to, you can all download for free. All you have to do is go to my website, which is harounmba.com, and then you scroll down right here. You scroll down all the way to the bottom. Here it is here. And you can download the book for free right here. It's called Networking to Get Customers a Job or Anything You Want. Quick little side note. For those of you in my MBA degree program, Silver, Gold, Platinum, if you click up here on Power Search, I added a new feature. And here's how you can access the new Excel course I added for you guys, which is exclusive to my MBA students. I teach you program as well. But I added a new feature here so you can search for anything. It's still in beta. Okay, but I'll type up theta, which is a Greek variable, which I teach in one of the options and derivatives classes. And then based on whatever program you signed up for, you can click here and then go right to where I talk about theta, for example, if you're enrolled in the program, that is. Okay, let me go back to Big Chris here. Okay. All right. And give me 1 second, guys. Sorry, sometimes YouTube skips on me here. Yeah. And by the way, if anybody types a hyperlink or certain keywords, I won't see it. They're blocked by YouTube. Yeah, that's a good thing. The keywords, that is. Yeah. All right. Next up, I have got Manas, who wrote, Alphabet lost $100 billion in a day because their ChatGPT version made a mistake in their is Google failing with AI? Yeah, they're certainly behind. They're certainly behind Microsoft for the first time ever, as well as behind ChatGPT itself. And so Google's version of that product is called Bard, B-A-R-D. And yesterday there's an analyst event where the management team of Google showcased it, and people were certainly not impressed. And I've gone to check it out as well. It's certainly not as intuitive as you'd think. They are way behind. And Google has not done anything innovative in many years, right? Since search, if you think about it, or Gmail, which was in beta forever. They have no new products. I think the company is dysfunctional, and they've stopped innovating. And one of the reasons is because they're basically a monopoly, and they should be broken up. You know, it's not fair that Google owns the two biggest search engines in the world, which is Google and YouTube. Yeah. Okay. And then Ake wrote, I personally think that Google is going to have that same fate as Netscape. Yeah. Netscape was the first commercial browser available, created by Mark Andreessen back in 1995. It went public then. It was an awesome IPO. And then what happened was Microsoft gave away their Internet Explorer browser as part of Windows and forced the company into bankruptcy, or it really didn't go anywhere. And the ironic thing is that Microsoft now owns the IP of Netscape. They bought it years ago. Yeah. Now, what Microsoft did was anti-competitive by bundling their browser, which nobody uses anymore, with Windows. And I remember Bill Gates was testifying before Janet Reno, who's a district attorney that wanted to break up Microsoft in 1999. And he was asked about this. He was asked, why did you bundle this? That's not competitive. You can't include your browser in Windows. And his answer was brilliant. He said this, right? He said, well, you use File Manager, which is their Windows Explorer in the old days, to browse your computer. And you use Internet Explorer to browse your computer as well as the internet. And they renamed File Manager to Windows Explorer. In fact, even to this day, if you use a Windows-based file manager, Windows Explorer, and you type in a web address, it'll switch over to the internet. So it was genius. But eventually, the European Union made them unbundle, IE, meaning Internet Explorer, from Windows. And once Bill Gates left, innovation kind of died until Satya Nadella, the rock star, kind of turned the company around. Yeah. Okay. And then next up, Chris, do you have a Discord server? If not, I can help you set it up. It's a great platform. Thanks. We use Slack. And so I have Slack channels for all my MBA degree program students, and they network a lot that way. We might move to Discord, though, in the near future because I'm not a big fan of Slack, which was purchased by Salesforce. They've done a horrible job with innovation with it, and they've started to charge for things as well. The ridiculous thing about Slack is you cannot search for messages that are more than a couple months old unless you pay. And you have to pay like $8 or $9 per user. It's ridiculous. Discord is open source and free, and I love it. And thank you for that offer. Okay, Pulasti wrote, "Hey Chris, how are you? I'm always great. I hope you're doing well." Okay, and then next up we have Paul Brow, who's from Barcelona. He's one of my platinum students that started last September. Great guy. I met him a few years ago, actually, when I was in Barcelona, and he gave me a great shirt that says Qatar, which I wore on one of these webcasts as well, or Qatar. Paul, great to see you. Hello, buddy. Hope you're doing great. Likewise. Probably answered before. All good. But what are your thoughts on the tech layoffs taking place? Yeah. So what happened was technology companies during the pandemic overhired because it was a secular growth sector. Everyone was at home using more tech products, of course. They overhired, and now I think they're overfiring. They're kind of cutting into muscle, not just fat. And every tech company is using this as an opportunity to just get rid of their worst performing employees. But I think they're overdoing it as well. Now, one of the reasons why the American stock markets have massively underperformed the European markets recently is because America has a much larger percent of the market cap of their markets in the technology sector. In fact, if you look at the S&P 500, well over 20% of the companies in the S&P are tech related. So that's one of the reasons why we've underperformed here in America versus Europe, which has massively outperformed recently. Yeah, but it's starting to hit other sectors as well. Now, everybody was absolutely shocked when we saw the latest monthly jobless number, which was only 3.4%. That's the lowest percent in my entire life. That's a long time. Like, you have to go back to the 1960s when it was lower than that. And the conundrum is that the Federal Reserve is so confused. Inflation is starting to go down a bit. And so the Fed is not raising rates by 0.75 or 0.5% per month. They're raising by 0.25 now. And their intention is when they raise rates, this is an awful thing to say, but the Federal Reserve wants unemployment to go up because the biggest input into making any product is labor. So they want to fight inflation. So everybody was absolutely shocked by that number. What that means is the Fed will probably continue to raise rates at least 25 basis points for the foreseeable future. Yeah, it's frightening. And if you look at the yield curve, the differential between today's rate and the 30-year it's getting close to 1% again, which is a massive differential. That's called an inverted yield curve, which means that we're going into recession if we're not already in one. And an inverted yield curve has predicted almost every single recession in the past 10 recessions as well. If you want me to talk about the yield curve in more detail and talk about the data source of that at TreasuryDirect.gov, please let me know. Okay. All right. Next up, Manas wrote, Meta is failing with the metaverse. Yeah, they certainly are. Yeah. And Horizon, where they lost 10 billion again. What is missing? And yeah, what are your thoughts on this? Yeah. So Oculus, it's not a mass market product. You get dizzy using this thing. And so Department of Defense signed a $20 billion contract with Facebook or Meta a year or two ago to use these things for training purposes. And 80% of people that use these in the U.S. military complain they got sick. And I can't use this thing for more than 30 minutes without getting really sick. The user experience sucks. I've tried the new one as well. It's awful. And I don't think this is going to be a mass market product for a long time, but eventually it will make sense. And I understand why Facebook is trying to do this because they want to own the next platform. In fact, they renamed the company Facebook to Meta, also to de-emphasize Facebook, which is not the most popular brand out there anymore. And also the US government is going to break up Facebook into multiple companies, one of them being Facebook, Instagram, as well as WhatsApp. Facebook is still dominant globally, though, because 40% of people in the world use at least one Facebook app every month. It's unbelievable. The problem, though, with Facebook is they're throwing all this money away trying to invent a new platform, and they have nothing to show for it. They spent about $15 billion on VR-based research. And just to put that into context, Apple, in 2007, when they released the first iPhone, They spent $150 million in R&D to release that product. So Facebook has spent 100 times more on their VR strategy than Apple did with their first iPhone, and they have nothing to show for it. Nothing to show for it. Now, I think the way that the VR and AR market is going is initially it will start to get traction through AR, and it will be for second screen purposes. So, for example, we might be wearing these clear goggles so we can continue to work and look at our monitor, and we can look in the top left-hand corner, commensurate with Google Glass, and see a second monitor every now and then, like check a stock quote or check the weather or there's an email alert, that sort of thing. And I think that Ray-Ban is going to be a formidable player in this market longer term. I ride my e-bike every day. I love it. And I wish that on my Ray-Bans or glasses, I could have another camera in the corner or a screen where I could look to see who's behind me. Yeah. AR will be a bigger deal than VR, I think. Yeah. Okay. And the problem also with Facebook is they're trying to buy their way into this market. But the Department of Justice is Heismaning or blocking every small deal they try to do. Yeah. Because competition is good for the consumer. Yeah. And certainly the U.S. government has an axe to grind with Facebook because of elections, etc. Yeah. Okay, next up, why is the market bubble increasing in size? It is yet to burst, but still things look good for all. Yeah, it's all relative. So that the markets were down over 20% last year in the United States. So I would say the bubble kind of burst a bit. But the economy is still not in rough shape when you look at unemployment, for example. Yeah, it's a conundrum. And I think one of the reasons why unemployment is artificially low is because unemployment statistics are based on those that are looking for work. Now, during the pandemic, there was a new phenomenon that emerged, a new group of people called YOLO, meaning you only live once. And they're not looking for work anymore. They're kind of living their life on their own terms. And you can tell because the savings rate has gone down materially as well in the United States. And so if you're not looking for work, if you're part of the YOLO generation, and I respect that, then that does not go into the unemployment numbers. Okay. And then Ake wrote that the new setup is looking very premium and probably the best look since I've started watching this webcast. Thank you. I appreciate that. I tried something different. I did purple. I did an Instagram thing for Udemy yesterday, and purple's their color, so I left it here. Yeah. I don't know if I like purple though. I'm more of I like blue a little bit better. And I took my my letters off the wall down there. Yeah, they're there. They're kind of a little bit disorganized. Yeah, thanks. But we've certainly come a long way since our first webcast with my little MacBook webcam years ago. Thank you. Okay, next up, Chetan wrote, good morning, Professor Chris. Good morning to you too. I'm enjoying the Excel elective. Thank you. I hope you enjoy it. I spent over a year making it. I poured my heart into it. And I've been using Excel since the 1980s on my Mac. In fact, I used to be a beta tester for Microsoft as part of their Microsoft Developer Network, and they sent me all the versions of Excel over the years that I beta tested for them. Microsoft has sold over 1 billion copies of Excel since the 1980s. I've used it for decades. This is my second century of using it. And in the MBA degree program, in that elective you're taking, I teach you everything about Excel from scratch. I also teach you how to program in Excel, which is the best way to learn how to code. Yeah. Okay. And I'm learning a lot. Thank you for that. Can you mention names of events which led to the spikes in the VIX from 1993 to 2022? Absolutely, sure. So for those of you not familiar with the VIX is a volatility index. Volatility means fear, okay? And the VIX was actually founded by the CBOE, which is the options exchange in Chicago, back in 1990. And what it measures is what the market expects volatility to be in the next 30 days for the S&P 500, okay? And so a high number in the VIX means fear, meaning the market goes down, which is when you buy. And a low number means there's not much fear out there. Let me show you a full screen here, and I'll show you exactly what this means. I'm going to get rid of my face in the corner. So face off in the corner. It's my Canadian saying of the day. And what I'll do is I will explain this from scratch. And the great thing about this is it will tell you when to buy the market. Okay, so let's go all the way back here. I think there's probably an easier way. Maybe I'll click minus. Oh, they're making it harder and harder to do this now. Okay, let's go to maximum. Here we go. Okay, good, great. Okay, so the way this works is a reading of, usually below 20-ish or so means that people are really bullish, which means don't go all in on the market. A high reading above 70 or 80 means people are terrified, which means you should back up the truck and buy tons of stock. So let me explain from the beginning here. So it was released in 1990. You saw a bit of a spike here, a bit of fear, not too much. And this here was Gulf War I, right? When Bush Sr. invaded Iraq. And then what happened was the market settled. You had a slight uptick here. There's a bit of fear because of Latin American debt crisis. And then over here, there was concerns about Asia falling. It was the Asian contagion or Asian flu, nothing to do with COVID. Just a lot of Asian countries were doing poorly. And then you had Alan Greenspan do an emergency Fed rate cut. I worked at Goldman on the floor then. Remember that the floor erupted. And then over here, you saw an uptick here after 9/11 for obvious reasons, but that wasn't that much fear. Only a reading of 42.6 on the right side there. Then things started getting better. The statue of Saddam fell around here. The U.S. invaded Iraq again. And then eventually what happened was here, the VIX reached almost 80 in the fall of 2008 when we were within 24 hours of bank machines not working. We had massive credit default swap issues. I can explain that in more detail if you want me to. And this was the time to buy right here. Now, hindsight's 2020, I know. And smart investors like Warren Buffett bought a ton of shares in Goldman Sachs preferreds, et cetera, and did incredibly well. Then we saw a bit of a spike again during what's called a flash crash. And then fast forward here to 2020 in March. And you can't see this, but intraday in March of 2020, during the initial stage of the pandemic, the VIX spiked to above 80. And it was terrifying. And it was so scary at that point in time that what happened was the price of oil went negative. How the hell can the price of oil go negative? Well, the futures price went negative. And the reason it did was because of panic selling. It was ridiculous. And also some people argued that, well, it costs you $600,000 a day to keep a tanker afloat in the Baltic Sea, for example, with oil. Therefore, the future price of oil should be negative. It was crazy. And a lot of people made a fortune by buying right here, including Elon Musk, who's very unemotional, which is one of the reasons why he's successful. You got to be unemotional. So there's a Form 4 filing that hit SEC.gov for TSLA, Tesla, here, where Elon Musk bought a ton of shares in Tesla, a ton. And then he sold those shares in late 2021, 6 weeks before the market peaked in early 2022, right? So you got to be unemotional. So the bottom line here is that there's not a lot of fear right now. It's interesting, I guess, because U.S. economy is still doing relatively well, although there's going to be a hell of a lot more volatility this year. The bottom line, though, is that if you see the VIX above 70 or 80, I promise you it's going to feel like the world is ending. And no matter what, I want you to buy stocks or ETFs and growth stocks or ETFs at that point when it happens. You're going to think to yourself, I'm crazy if I buy now, but that's the time to buy. Because as Warren Buffett said, you got to be greedy when others are fearful and fearful when others are greedy. Yeah. Okay, cool. All right. And I'll be right back. I'm going to take a quick break. Here's a short vlog with myself, my kids golfing. I'll be right back. Thanks. I'm with Dylan and Matthew, and we're playing golf. And epic parenting fail here. Remember Mario Kart in the middle here. No, in the middle. Oh my God, sorry. Or I'll make this vlog really quick so I don't die. Slowly. Okay. So I'm gonna go fast. Yogi Berra said that baseball is 90% physical. Oh God. And the other half is mental, or maybe it's 90% mental. The other half is physical. I can't remember. I'm worried about dying, but we're okay now, right? No more touching that. And so baseball, like any sport, is all about confidence. And the same thing with golf. And I thought of this today because when I was, okay, go ahead. Just not too fast, okay? When I was in my backswing, I told myself I'm not gonna hit a great shot, and I didn't. And confidence is not something you learn. It's a switch that you turn on or off. Okay, I'm gonna hit that switch, don't touch it again. Thanks. Okay. And so if you go in your backswing, in golf or in any sport for that matter, or right before a presentation at work, if you tell yourself I'm going to do exceptionally well, I promise you, you will. You know, perception becomes reality. You got to turn that switch on. And so another thing I want to say is that in any sport, if you follow through, we know that you actually have a higher probability of hitting a good shot or making a goal, etc. And the reason is because you're focused on the end goal. You're focused on the end goal. You know, the closest distance between 2 points is a straight line. Okay, I'm gonna end this vlog right now. I think you get the idea, so I can go spend time with my kids here. If this was helpful, and only if this was helpful, please click the like button. Don't let your kids drive ever at a young age like this. Epic parenting fail. And I will see you mañana. Thank you. All right, thank you everybody for letting me take a break there. A lot of people ask me about where's my studio located. It's in a place called Hillsborough, California. This is part of my house. It's a separate building I have on my property here. It's a beautiful day right here, as you can see. Let me close the door. It's nice to have a day without rain, man. We had horrific rain occur in the past couple of weeks here, but nothing compared to what happened to the poor people in Turkey or in Syria. I'm praying for them, of course. Okay. All right, next up, Ginny, how are you? Ginny wrote, by the way, there's a guy I'm seriously into. Cool. I thought to share because you know your family. Awesome. Awesome. Nice. Lucky guy. Okay. And then the Berlin, who's from San Bernardino, California. Ginny's from Vietnam. The Berlin wrote, Chris, good morning, and everyone else. Great to see you, always. I'm looking forward to meeting you in person this August 12th and 13th when I have my annual Gold and Platinum alumni event and networking event here in the Bay Area. I rented a great museum again. You guys are going to love it. There's going to be a lot of fun stuff. We'll do in-person one-on-ones as well. Next up, Manas wrote, Binance blocked withdrawals in US dollars because people shifting from them to offline wallets. But this is against the law of decentralization. What are your thoughts? Yeah, so I've said, and I say this with love my heart, I always want my students, if you're going to transact in cryptocurrencies, first of all, don't have more than 5% of your liquid net worth in cryptos, and never have more than 0.5% of your liquid net worth in any one crypto. And if you're going to keep your money in cryptocurrencies, please keep them in cold storage wallets, meaning those little, looks like a USB token wallet made by companies like Ledger Nano, or Trezor. Don't leave your money online. It's not FDIC insured, and it's always at risk in a hot wallet. Yeah, please be careful. Yeah. Now the whole sector is about to be regulated by the SEC, which is a good thing for crypto investors. Yeah, and by the way, it kills me to say this, but I've had this issue with people pretending to be me and asking my students using social media networks for money in cryptocurrencies. I would never do that. Never do that. And so I have a good friend, Carol, that works at Instagram. I just texted her and she took down that fraudulent account. And if you ever see a Chris Haroun, meaning not me, but someone pretending to be me, asking you for money or to invest in something on any social media platform, report that person, please. Thank you. Okay, it's frustrating. Yeah. Awesome. Okay. Okay. And then the Berlin wrote, Chris, Bob Iger doing some cleaning up at Disney Star Wars Hotel is doing some price slashing too expensive. What is your take on Disney layoffs? Yeah. I mean, he's the right man for it. He's amazing. I wish that he ran for president. I think he'd be a hell of a president, although you can't really run the country like a business. But yeah, every single company is doing restructuring and laying people off. Now's the time to do it because everybody is doing it. So if Disney wanted to let people go a year ago, investors would have panicked, but now everybody is doing it, right? I know it's a weird thing to say, but in the tech sector, everyone is using the excuse of oh, everyone else is laying off. I might as well let people go now as well, just to restructure. Yeah, it's sad though. Yeah. Okay. Excellent. Thank you, Ginny, for that. Yeah. And we have Ya from Colorado, who's in my MBA program. I think you started last September. Great to see you. Hope you're doing well. We have Carolyn, who's in my Silver MBA program, who's from France but lives in Canada. She got married recently in Nova Scotia. Congratulations again. She has 2 cats named Mimi and Mumu. So Caroline wrote, good morning, Chris. How are you and your family doing? Looking forward to seeing you later. Awesome. Awesome. And thank you for the emojis and God bless you. Yeah, thank you. Everyone is great. Thanks. The kids are getting bigger. That video you saw when I was taking a quick break there was from a couple of years ago, obviously. But this guy here, he's 18. He's at Berkeley doing undergrad. He started engineering there. He didn't like it. He switched into business now. I don't know where he gets that from. This guy here, Matthew, he's 17. He'll be going to university in a year or two. This guy here, Dylan, he's 13, going on 30. You know, the youngest one. He's a little munchkin. He's kicking my butt in 2K on the PS5. I can't beat him anymore. Yeah. That means I'm getting old. Okay, next up, Denise wrote, good afternoon from Scotland, Chris. Great to see you. Great to see you. Thank you. Thank you. And I watched I watched a special event the other night on TikTok for Sean Connery, and Mike Myers from Canada did the best Scottish accent ever. Yeah, great to see you. I love Scotland. I went up there to visit with I think it was a company called Sage years ago, a software company in Edinburgh. Yeah, beautiful. Okay, and then Yah wrote, can one tell if a stock, for example, GLD is the ticker of an ETF for gold, and you pay about 50 cents for every $100 you put in per year in fees, which is not that bad because it's real gold, right? You won't get scammed. And my biggest long position in 2008, my hedge fund, was GLD. I couldn't find anything else to buy. You wrote, can one tell if a stock like gold is inversely related to the market by looking at its beta? Yeah. So, not really. Usually, and this is very rare, if a beta has -1, it means it's 100% inversely related to the market. But that doesn't usually happen. Usually betas, mathematically, are between 0 and 2, usually. And the S&P 500 has a beta of 1. GLD probably has a beta of under 1, between 0 and 1. Let me double check it for you. Yeah. You can always look at historical data, though, if you want to run a regression analysis. And you can download the data here from Yahoo Finance in CSV format, that's comma separated value format, in order to run a regression analysis or a CORR function analysis within Excel. Yeah. Okay, so the beta here, let's see here. The beta is 0.1, very low. Yeah, yeah, that's the lowest beta I've probably ever seen in my entire life. Yeah, people usually, didn't work out this way, but usually buy gold when they're really, really worried about the market. And quite often, but not in all cases, when the market goes down, gold goes up. Yeah. Okay. Next question I've got here is, what are the usual reasons for a founder or a C-level executive leaving a company? Yeah. Oof. Let me first of all say, whenever you read a press release that a CFO leaves a company for personal reasons, look, my heart bleeds for people that are going through rough times, but I've been so burned by this in the past. You know, it's maybe 10% of the time it's personal reasons, but there are circumstances where when there's smoke, there's fire. Yeah, yeah. And when a founder leaves a company, quite often it's because the board disagrees with them on something, or they're fed up with bureaucracy. And I never invest in any company when the founders have all left or no longer involved, or if they have a new pet project. Like I remember investing in tech stocks years ago when I worked in the hedge fund industry. And whenever a founder bought a sports team, we would think about going short that stock because they need to be laser focused on execution. The same thing happened with Elon Musk last year with Tesla. You know, he got really involved with Twitter. And you know, he basically took his eye off the Tesla ball, so to speak. And Tesla got crushed. He lost $200 billion in market cap, partially because the market went down last year, and partially because he was focused on something other than Tesla, meaning Twitter. Yeah. So just be really, really careful with investing in companies where the founder is no longer there, or the founder kind of has a pet project on the side. Yeah. Yeah. Okay. And then next up, do you go back to reevaluate a company after 5 to 10 years of investing to see if the company is still worth it, or only when something occurs that pushes the stock down? Yeah. So when I used to manage money professionally, I would reevaluate it quarterly. Okay, so every 3 months, a company issues what's called an 8K, which is a press release that releases earnings. And what I would do is I'd update my financial model. And if my price target in 5 or 10 years and my financial model changed materially, I'd think about maybe selling the stock or buying more if my price target went up a lot. Yeah, so I reassess it quarterly. Yeah, but the good thing about doing an investment write-up on stocks, and I provide you with all the templates and tools in my MBA degree program. I have a prop for everything. I provide all the tools for doing any type of investment write-up, be it a business plan or investing in a stock. The good thing about doing a write-up, even if it's one page, is you do the write-up, then you buy the stock. And let's say 6 months from now, there's a negative news release and everyone's freaking out and you want to sell the stock. Well, you go back to that one pager and you read it and you ask yourself this. Okay, 6 months ago when I was doing this write-up, if I had known about this new piece of information released that made the stock go down, would I have still bought the stock? And if the answer is no, sell it. If the answer is yes, buy more, as long as it's not a full position. A full position, from my risk management metrics I teach about, is 5% of your portfolio. Yeah. Okay. And little side note, but if a stock does not go up on multiple positive data points, it probably means it's over-owned. Too many people own it. And also, if a stock does not go down on negative news, it probably found a floor. And when I worked in the hedge fund market and when I was short GameStop and long GameStop years ago, I used to look at that closely. If GameStop released earnings that were awful and the stock did not go down and I was short, I would get scared and I would cover the short position. Now, that's kind of what happened to a certain extent in January 2021 when GameStop went up 29.4 times in the month of January 2021. The stock was not going down negative news. It was terrifying for hedge funds. Hedge funds lost a fortune. People lost $6 billion on that short squeeze, meaning the stock going up a lot. There were other reasons too. Ryan Cohen, who runs an activist fund, took a stake in the company, 9%, and he joined the board as well, became chairman. He's great at turnarounds, but it was terrifying. Everybody lost a fortune on that. And people that were short selling, even Michael Jordan, he lost, apparently, according to people familiar with the matter, $500 million on the GameStop short squeeze. Yeah, scary. And the rule of thumb usually is, for hedge funds, at least when I used to work in the hedge fund industry, if the short interest ratio is 10 or above, do not short because it's crowded. Now, the short interest ratio means you take the average daily volume for a stock and you divide it by the number of shares that are short. And so if that number is 10 or higher, it means it will take 10 days worth of volume for people to get out of that short position. Terrifying. Yeah. And that's why if you want to bet against companies, I don't recommend shorting. I recommend looking into buying puts, which is part of my MBA degree program. The most you can lose on a put is the amount you paid for a put if you buy it. Okay. The most you can lose on a short is infinite if the stock goes up like crazy. And a lot of people will buy puts to protect them. It's like an insurance product on underlying stocks. So for Coca-Cola, ticker KO, if you owned Coke and you didn't want to sell it, say you didn't want to sell it because you don't want to pay taxes on it, but you're worried that the stock might go down in the near term, you can put protection on it called a put. And if Coke goes down, this goes up. So it's a wash. Yeah. Okay. Okay. Next up, Eric wrote, please explain 3 main principles of grant accounting for nonprofits. Yeah, the capital approach, the deferred income approach, and the income approach. Yeah, I'm not an expert in not-for-profits at all. I'm so sorry, and I'm probably not the right person to answer that question. Yeah. Okay. All right. Okay, and then T-bills versus bonds. So T-bills, basically, it's treasury bills, United States government debt. So when the government raises or lowers interest rates, that's a near-term rate. And then the long-term rate is kind of set by the market. That's what T-bills means in this context here, treasury bills. Bonds basically means anybody getting a loan, right? So a bond includes T-bills, any debt instrument. Yeah, and so companies and governments can issue bonds as well. Yeah, and they're risky, and you can get wiped out with bonds, even if it's a government bond. So, for example, people that invested in Orange County bonds, which is Southern California, they got wiped out. They lost all their money. So always be careful, even when it's government. Yeah. That's why diversification is of paramount importance. Okay. Next up, Eminem wrote, with ChatGPT and new AI tools getting better every day, what careers would you suggest your kids do in high school? I mean, skate to where the puck is going. I love that saying. Thank you. One Canadian to another. So my son, Andrew, who's in university now, he just dropped out of engineering. He's doing business, but he's focusing on data science in his electives. So anything involving data or data analytics, I think is a great market, but you've got to be passionate about it, right? And that's a subset also of artificial intelligence. You got to be passionate about it. If you're not passionate about it, forget it, because there's so many other people that are techies that love doing what they're doing. And when you love doing what you're doing, you're way more productive, way more competitive. Yeah. But I think that every kid should learn how to code. And I teach that in my Excel elective in my MBA degree program as well, how to code in Excel. It's the best way to learn how to code. If you can code in Excel, learning Python, other languages is way easier. Yeah. And I teach it, of course, with many props, as I always do. Okay, next up, Ake wrote, on YouTube, I only watch you, Lex Friedman, David Goggins, and Joe Rogan. Oh, thank you. Thank you. Yeah, I listen to Joe Rogan as well. Yeah. When I'm in the gym in between sets, what I do is sometimes I'll search for Joe Rogan, just watch interviews on TikTok. Yeah, I love TikTok. Yeah. And I advise everybody to watch last week's Saturday Night Live episode. You can watch it on TikTok too, just segments of it, with Pedro Pascal. It was the best episode I've seen in decades of SNL. It was amazing. Yeah. I'm watching The Last of Us as well, which is a masterpiece. Yeah. Video games even better. Next up, Eric, who lives in Florida, who started a couple of technology companies that DARPA, U.S. government, might invest in. Eric wrote, did you say that there are accountants who specialize in government grants? Likely. I don't really know. I'm sure you can Google it or Bing it if you work at Microsoft. Yeah. And by the way, I don't want anybody to do your own accounting, ever. Doing accounting yourself is like doing surgery on yourself. It sounds ridiculous, but I'm trying to make a point with love of my heart. The reason I don't want you guys to do your own taxes is because the tax code changes all the time. And the accounting profession exists partially because of that. And accountants can get you a lot of write-offs. If you have your own business, I want the same accountant that does your personal taxes do your professional taxes as well. Now, there's no centralized repository online to find a good accountant. There's no Yelp for it. What I would do is just ask your successful friends, family members, etc., to introduce you to their accountants, and do it quickly. Don't do it, April 1st. Okay. All right. Next up, Eric wrote, during meetings with investors, what other items beside time and money are generally negotiated? Yeah. So what I recommend doing, it looks like you're about to raise money, is I would do a search online for Wilson Sonsini term sheet generator. Okay, Wilson Sonsini is a law firm I've used here in the Bay Area. A term sheet is something you sign with investors before they invest in your company or before they look to maybe invest in the company, which sets all the terms. And it can get quite complicated in terms of common shares, preferred shares, the capitalization table, etc. So do a search on Wilson Sonsini and then a term sheet generator. And basically that's a process that they have a website, WSGR, Wilson Sonsini, that will create the entire term sheet for you. It's wizard-based technology. You answer questions, and it creates a Microsoft Word document that's 10 to 15 pages. Term sheets are not legally binding, though. Yeah. Always get a lawyer to do all that stuff for you, though. Go to LegalZoom.com. Okay. Next up, what part of negotiating with high net worth individuals do most students finding shocking and amazing? Yeah. Sure. So I would say if you're trying to raise money for your startup, and I teach this in the Venture Capital Bootcamp, as you know, the third semester of my MBA degree program, I want you guys to raise money from high net worth investors, okay, and not banks and not venture capital firms. I say not banks because if you miss one payment, the bank can take everything. I say not venture capital firms initially because the sales cycle is long. I say high net worth investors, yes, because the sales cycle is quite short. In the first meeting, you want to bond before business, talk about what you have in common, maybe go to their Twitter profile, see who they follow. If they follow athletes, you can talk about sports, baseball teams, etc. Bond with them. They will invest in you if they like you. And of course, if your business model makes sense, right? But they got to feel confident with you that you can sell as well. You know, perceived competence. Confidence leads to perceived competence. Yeah. And sophisticated, wealthy investors, they'd always rather invest in an A management team with a B business model instead of investing in a B management team with an A business model. And the reason why selling yourself is so important is because investors know that if it's an early stage company like yours, they know that the end market might change materially, but they still want to get excited about the company and you as well. If you can excite investors, especially when it comes to a boring concept like cloud computing, then you can make a fortune. And that's what Mark Benioff has done, and certainly Sir Richard Branson in many markets. Yeah. Okay. Okay. Eric wrote, how could I link Excel to a feed such as news, Twitter, etc.? Yeah, there's a lot of plugins you can use. If you're going to use them from the Microsoft menu up there to insert a plugin, just be careful because they're not always supported. And it gets tricky, especially with Twitter, who changes their API policy all the time. Yeah. Okay, next up, hey, Renveer, how are you? Renveer is one of my silver students from Mauritius. I have a bunch of students in Mauritius, actually. Good to see you. He just got a new job working in finance. He's passionate about financial markets and a good guy. He wrote, hey, Chris, how do you find the total addressable market if all the related company is private and there's no available data for this specific sector? Yeah. So generally speaking, if you can't find the total addressable market, you get the top 25 companies in an existing market that are publicly traded, and you add up their revenue for the entire year for all 25. That's a good enough proxy. And I know that your question's implied here that there's no available data on the sector. There is. I promise you. And I promise you publicly traded companies are in that market, right? So a lot of people will say, well, what if the market doesn't exist? How do I know the size of the market? It does, but you got to think about it differently. For example, when Larry and Sergey first raised money in 1998 from Andy Bechtolsheim, who I met as a friend of mine, he's the first investor, the search market wasn't that big. However, the size of the global classified market, advertising market, radio advertising market, and outdoor billboard market from companies like Lamar, ticker LAMR, et cetera, was massive. So you disrupt another sector, right? So it exists. Now, in terms of finding the total addressable market in general, do not use ChatGPT because it's confidently wrong. What I would do is I would do a search on the sector and McKinsey. And McKinsey is the best consulting company on the planet. They rejected me when I tried to interview there. Probably a good thing. But McKinsey has a ton of reports that will tell you the total addressable market of different industries. If you can't find it with McKinsey, do a search on Boston Consulting Group and total addressable market, or if it's in the tech sector, Gartner, Forrester, etc. Yeah. And if you're having problems finding a specific TAM, let me know and I'll find it for you, or I'll try. Okay. All right, and then Eric asked, would someone use SGov ETF over going to Treasury Direct? Yeah. So I don't know much about SGov, but what I do know is that the only place to buy I bonds from the U.S. government is TreasuryDirect.gov, and I think you should own them. You can own up to $10,000 worth if you're located in the United States. Currently, the rate is around 6.8%. It resets every 6 months. You will not lose money on it, even if we have a deflationary environment, right? And so investment banks don't sell Treasury Direct products. The only place you can buy it from is directly from the United States government at TreasuryDirect.gov. Yeah. Okay. Next up, what are your views on Google versus Bing engine in the long term? Now Google is trading at a PE of 21 times, tanking from yesterday's AI flop. Yeah. Well, Google will say that ChatGPT stands for something, the GPT part. The T of it, I forget what it stands for, but Google invented that technology. So they do have resources certainly focused on AI. But I don't think Google has done anything innovative since they created search advertising. They've done nothing. I remember years ago, there's a policy of one out of every 5 days per week, engineers could work on whatever pet project they wanted to. And there's great innovation back then from Google Labs. Google is no longer innovative. It's a big bureaucratic company at this point. Yeah. So yes, I do think they will lose share to Bing. It's starting to get priced in already. The devil's in the details, though, we'll see when it comes out. Now, there's a Wall Street Journal journalist who beta tested the new Bing search engine. She spent a couple days up in Redmond in Microsoft's headquarters, and she was blown away by it. She said it was unbelievable. It was better than ChatGPT. And the reason she said it was better is because the data is current, meaning ChatGPT only has data up until 2021. Also, when you do a search over Bing and the new product coming out soon, and their version of ChatGPT, you get all the data sources in real time as well. And that's important because if you try to verify the data on ChatGPT, good luck with that. I've used ChatGPT a lot. I'm excited by it. I've been using it since it came out in November, the public beta. And I've found so many inconsistencies, and it's confidently wrong all the time. Yeah. Okay. Next question is, how do you consider items in the AMEX exchange? The exact same way that I would value any company. And you're in the MBA degree program, go to EMS 4-2, Economics Management and Strategy, Semester 4, Class 2. And I have a 100-step framework, or one of the tools to help you analyze any publicly traded company. Yeah. Just be careful with volume, meaning liquidity with AMEX-related stocks, because a lot of times they're thinly traded, and illiquid stocks own you in a down market versus vice versa. Yeah. Yeah. Okay. Hey, Mike wrote, hi, Chris. Regarding cryptocurrencies, Charlie Munger said, yeah. So Charlie Munger works with Warren Buffett at Berkshire Hathaway and has for decades. Charlie Munger said, not a currency, it's not a commodity, and it's not a security. It's a gambling contract with a 100% edge for the house. Yeah. I don't disagree with him when it comes to most cryptos. Most cryptocurrencies are an absolute scam. And there is a need for government regulation to protect consumers, I think. I can't tell you how many of my students have gotten scammed by cryptos. I don't disagree entirely with Charlie Munger. Where I would disagree is that I think that there are a handful of cryptos that are probably good investments longer term, like Bitcoin, which I own. Yeah, but everybody's getting skeptical now, and the market is turning so bearish on cryptos and NFTs that I'm about to start buying. I'm not going to tell you which ones. Yeah. Okay. Give me 1 second here, guys. Okay. All right, next up, Eric wrote, what kind of an indicator is GLD, forward or lagging? How do you forecast using GLD? It's tricky. You have to think, I don't even know. But like with any commodity, you have to analyze how much supply you think there is on this planet and what the long-term industrial uses will be of any commodity longer term. Yeah. I do like investing in commodities except for oil, because there is a scarcity factor. Yeah, unlike with many cryptos. And Jamie Dimon, actually the CEO of JP Morgan, recently said, maybe Bitcoin's a scam. He said, how do we know that the maximum number of Bitcoins that's ever going to be created by 2140 is 21 million? How do we know? Yeah. And that's why I always recommend, if you're going to buy cryptos, never have more than 0.5% of your liquid net worth in any one particular crypto. Okay. Is gold a forward leading indicator or lagging? I don't really know. All I know is that when times are brutal, I tend to have gold as my biggest long position. Yeah, like in 2008. Yeah, I don't currently own gold though, unless it's in one of the ETFs. So, okay. Manas wrote, it's true. Google has been enjoying a monopoly over everything. They need to face competition, and specifically with decentralization. The founder of ChatGPT hates capitalism and wants to destroy it forever. Yeah, well, I definitely disagree with the founder of ChatGPT then. Yeah, but I do believe in information being accessible to everybody and freedom of speech as well. Yeah. Okay, Renvir from Mauritius wrote, Chris, what are key questions one can ask during shareholder meetings? Yeah. Oh boy. Whenever I get to talk to a CEO, I always love asking this question. What is the most misunderstood aspect of your business model by customers and investors? I love asking that question, yeah. If it's a CFO, and it's an open webcast, I usually ask questions like, how should we think about your operating margin target in the long run, right? So whenever you say, how should we think about, they're a little bit less guarded, right? And I was trained actually in one of the first hedge funds I worked at by a lawyer on how to ask questions the right way. You don't want to lead the witness, so to speak. So if I were to ask a CEO, tell me how amazing, your new competing product is with ChatGPT, they're going to say great things. Instead of that, you can say, how should we think about the pros and cons of the various players in the market competing with ChatGPT? Yeah. Always be open-ended like that. Do not lead the witness. Yeah. Okay, JM wrote, how does an individual investor get access to sell-side research? You usually can't unless you're covered by the private wealth management team of an investment bank, meaning you have a lot of money, whatever, and maybe you do, yeah, or maybe you can call one of them up and get covered by them, yeah. But I don't want you to get access to sell-side research. I don't want you to read any of that garbage, and I say that with love in my heart because I don't want you to be biased by anybody. I want you to do your own research, and in my MBA degree program, I have a 100-step template I provide you with in the 4th semester that will help you create a sell-side type report that's way better than any sell-sider will create. Why is it better? Because I analyze everything. I have you analyze everything. And because you come up with the idea and the investment thesis and not somebody else. Please be aware that, and I say this with love in my heart as always, that these sell-side analysts are biased. And everybody is biased when they're on television pitching a stock. The most dangerous thing you can do is watch CNBC and watch an interview with a sell-side analyst because they're incredibly well-spoken and it might lead you to buy that stock. It's kind of like when you're doing investment research on a company. Do not talk to the CEO or CFO initially. Don't even watch the interview with them. Do your own work, right? They're given, corporate Darwinism, they got to the top because they're great salespeople. I don't want them to bias you at all. I want you to do your own research. And the sell side, there's supposed to be a Chinese wall that separates investment bankers and the trading floor and sell side analysts. But it doesn't always exist. And I'll give you an example. Years ago, the software analyst at Morgan Stanley quit. I think his name was Adam Holt, good guy. He went to go work for Frank Watron at Catalyst Investors Investment Banking. And Morgan Stanley called me and they said, do you want to be our new sell-side analyst? And I said, no, thank you. But I have lots of friends that might be interested. Would you like me to find them for you? And they said, yes. So I called a good friend of mine. I won't mention his name. And I said, hey, Morgan Stanley is looking for a new sell-side analyst to cover the software sector. Are you interested in this position? And he said, Chris, I'd love to, but the problem is, in the past, I had a sell rating on Microsoft. And there's no way they'd hire me because of that. And I said, why? He said, well, because Morgan Stanley probably wants to do a lot of investment banking work with Microsoft in the future as Microsoft acquires companies like GitHub, et cetera. And they won't want me to be on television because people remember me as being somebody that was bearish on Microsoft. So although there is a Chinese wall in place, there's supposed to be separation of investment banking and the sell side analysts. There's still a bias there, and you have to be careful. And so always do your own research when investing in any stocks, please. Don't rely on me or anybody else. Yeah. Okay. Next up, Manas wrote, what happened in the crash of 1987? And were you back then in Canada? I was. I remember a bunch of us got burned on a company called New York Seltzer, which is like, it was kind of like a clear sugar drink. I remember that. Yeah, I was an investor back then. I started investing when I was 13 in the stock market, meaning in 1985. I remember it well. Yeah. I didn't sell anything. I just kind of was confused. I was a confused kid at the time. Yeah. But the movie Wall Street with Michael Douglas, and I have a vlog on that, came out around that time as well. Yeah, and Ken Griffin, who's a guy I work for, he's my boss or my boss's boss when I worked at Citadel. He made a couple $100,000 in 1987 by going short the market. That's one of the ways he got started. And Ken Griffin recently picked up his company and moved from Illinois to Florida, which is a smart move for tax reasons. And I had friends that went to Harvard with Ken Griffin, and apparently he had a satellite dish outside his window back then, right, which was getting live data feeds. He would get FedEx every day from the sell side and other research firms to his door. And he graduated in 3, not 4 years. He's brilliant. Yeah, smart guy. Yeah. And when I met with him in his office, first time I spent a half-hour one-on-one talking to him, what I always do is I always look at the bookshelf whenever I'm meeting with somebody more successful than me, which is every meeting. And I always order all the books they have. So for Ken Griffin, he had a textbook or two by an NYU professor named Damadorian. So of course I ordered those books. Yeah, but super nice guy. We talked about software stocks, which is a sector I covered, video game stocks as well. And he was a gamer. I think he likes sports games. Yeah, and a lot of the code at Citadel actually was written by him. It's amazing. Great company. Yeah. Okay, and they did very well last year too. Okay, I think they're up like 32% or something. Yeah. Okay. Next up, Eric wrote, in class you stated that the yield curve on the federal government has predicted every single recession. Almost everyone, yeah. Does the yield curve also predict every single recovery? I've not done a data analysis on that. I doubt it would be as definitive in terms of a correlation. Yeah, but you can always backtest it. And if you go to TreasuryDirect.gov, what you can do is go to data in the menu, and you can look at yield curve data. And you can download all the historical data to run a regression analysis. Yeah, they have all the data there going back to 1990. Yeah, on a daily basis. Yeah, it's amazing. Okay. And then who's from Colorado, wrote, speaking of unemployment, Disney just, I saw that, announced 6,000 layoffs. If the unemployment percentage is low, does this mean that most people are exiting the labor force? Yeah. No, so usually when the unemployment rate is low, it means that not many people are unemployed, as simplistic as that sounds. But what obfuscates or complicates this matter is that the unemployment rate only discloses people that are looking for work. Yeah. Okay. And then Brian, hey Brian, how are you, man? And Brian, thank you so much for offering to help to help one of my students from St. Louis. Appreciate that. Very, very kind of you. Yeah. Yeah. Brian works in DC, in Washington, DC, and he's a money manager and a private wealth management advisor as well. He's done very well. And on his wall, and I had him actually on Zoom last week and the week before, and maybe I'll get you on Zoom again in a couple of minutes if you want. But on his wall behind him, he has Spider-Man #1, Amazing Spider-Man #1, which is a 9.2 rating on his wall, which is worth a fortune. And he's got a ton of art as well, signed by Frank Miller, yeah, Stan Lee and all that stuff, yeah. So Brian wrote, in your Sales 101 class, you mentioned wearing makeup for online meetings. Do you also wear it when meeting people in person? Yeah. Here's what I do. Okay. So if I cut myself, and I cut myself pretty badly shaving, okay, and you can't see it, it's actually hidden now under there, but I cut myself really badly, and I have cover up, and so I put it on right before today's meeting. So I would wear that just to cover up a gap, right? And just, yeah. And I didn't know this, but when you go to the drugstore to buy makeup, right, my wife helped me, you have to match your skin color as well. And my wife got me this brush for Christmas from Sephora. Yeah. So here's what I do. You'll notice I'm looking more shiny than I was at the beginning of the webcast. Anybody on television, like when I've been interviewed on NBC and stuff, they always put makeup on you before you go live because you have all these bright lights, right, which makes you shine, right? And so what I do is this, and the product is called Stay Matte. Maybe he's beautiful, maybe it's Maybelline, I don't know. But here's how you do it. So I'm shiny right now, as you can see, right? I get rid of the shine like this, and everybody in movies has this stuff on as well, and television, whatever. And it gets rid of the shine. And the problem is I go through this stuff so fast, my nose is massive. Yeah. You go like this. And if you're going to do it, usually wear a towel in front of it, and while you do it, and always have one of these things handy as well. Yeah. Okay. So my answer to your question is yes. And then you wrote here, I'm going to Sapporo today, since I have a sizable potential account, and we are meeting on Zoom next week. Are there any other products you recommend? Thank you. Yeah, absolutely. So what I do is, so you never get a second chance to make a first impression. Cheesy, I know. But I use this product here called Throat 37. And a lot of rock singers like Bono and opera singers use this. And if your voice is groggy, what you do is you spray it in your mouth, tastes like nothing, and it fixes your voice, called Throat 37. So I recommend this. What I also do sometimes is, and a lot of newscasters do this, is if you put your hand, the way to fix your voice, if it's groggy, you put your hand here, your finger, you drag down, you push kind of hard, not too hard, and you'll find a bump in your larynx. Okay, it's a bump. And you massage that bump in your throat. Okay, you massage it for a minute or two. And then what you do is you get a straw and you blow in the straw and you like, woo! That's ridiculous, I know. But that helps as well. Aside from that, I can't think of any other cosmetics. I do put there's a caffeine product by L'Oreal I put under my eyes if I'm tired and I didn't get enough sleep. It's called L'Oreal Men Expert. Yeah. And so I put this under my eyes, and it's caffeine, which, and basically what it does is it gets rid of bags under your eyes as well. You can also mask bags under your eyes with the lighting you have in your office as well, if you want to. Okay. All right, next up, Eric wrote, the Federal Reserve website. I noted that the debt is increasing at 1% per day. Is that right? I'm not sure. I've not looked at the data. I watched the State of the Union, or I read about it, sorry, from Biden the other day. And for those who are not familiar with that, it's the annual speech the president gives in Congress. And depending on whether you're a Democrat or Republican, if you're a Democrat and you're giving the speech, after everything you say, half the room stands up to clap and the other half doesn't, which are Republicans, and vice versa too. Unless you say something about national security. Yeah. But what's happening right now is Republicans who kind of, I think they control the Congress now, right? Or maybe it's the Senate. I can't remember. I'm not an expert in this area. But right now there's a lot of saber rattling going on between Democrats and Republicans with respect to increasing the debt ceiling. Yeah, which I hope they don't. And then you wrote, what would a highly trained professional, such as yourself, no, please, ponder after such a discovery? Okay, of the debt increasing 1% per day. Yeah. I wouldn't worry. I mean, people always worry about this sort of thing. And in fact, whenever the debt rating of a first world country gets downgraded by S&P or Moody's, 1 year later, the market's higher. Yeah. I wouldn't get worried because the lender of the very last company, so to speak, on the planet to go bankrupt, it's all relative, would be the U.S. government. Yeah. And everybody, given globalization, everybody's attached at the hip. Like China is dependent on us and vice versa. And China has to buy our treasuries. They have to. Yeah. And I can talk more about that if you want me to. But everything is relative. Yeah. And when push comes to shove and there's widespread panic globally, the US dollar usually rallies. It's seen as a flight to quality. It's all relative at this point and has been for decades and will continue to be this way for the rest of my life, I think. Yeah. And that's why when people value companies globally, they use what's called the risk-free rate. And the risk-free rate is the lowest risk rate on the planet. And so when you value companies, you use the risk-free rate plus a risk premium. The risk-free rate people use is U.S. Treasuries, right? U.S. interest rate. They used to use LIBOR, which is London Interbank Offer Rate, but people just use Treasuries now. It's all relative always. Yeah. And the U.S. does have a lot of problems too, but I do believe that it's the very last country on the planet and the very last entity, the federal government, that would ever go bankrupt. Yeah. Yeah. Okay. And it used to be based on gold. The US dollar used to be based on gold. But in 1972, when I was a baby, Richard Nixon took the United States off the gold standard. And so United States debt is backed by the full faith and credit of the U.S. government. Yeah. For those of you not familiar with Richard Nixon, he's the guy that said, "I'm not a criminal." Yeah. Okay. All right, next up, Eric wrote, is it plausible to take your IMP system and use it to reverse run an organization? I don't know what that stands for. I'm sorry. Let me know what IMPS stands for, and I'll humbly try to answer the question. Thanks. Okay, next question is it true that most large investment firms do not trade on stocks less than $10 per share? If true, should I not be mining for the next big one in the under $10 category? Yeah. The reason you might have heard that, it's not necessarily always true, is because most companies that have very large market caps are the ones that the big investment firms can want to manage money in, want to buy, right? Because if they're going to buy a small cap stock, it's not going to really move the needle much for these large funds. As a result, a lot of the companies they invest in, have share prices that are higher. Yeah. And quite often, whenever a share price goes below $10, in fact, on the NASDAQ, if it goes below $4 for a certain number of months, it gets delisted. Yeah. So quite often, a very low share price indicates the company could be in trouble, but certainly not in all cases. But regardless of what you invest in, you always want to make sure that it's liquid enough, meaning, can you get out within 1 hour of that position if need be? Yeah. And the way to calculate that is you look at the average daily volume times the share price. Okay. Next up, if we're sliding into a recession, what ETF sectors generally rise and fall? Yeah. So sectors that usually outperform when times are tough are ones that are exposed to consumer staples. Like Campbell's soup is a staple. Ticker CPB. Soup is good food. People are still going to eat soup during a recession. Certain healthcare companies, healthcare ETFs do well as well because people still get sick during recessions. The ones that don't do well, the ETFs, are usually tech or anything growth oriented, as well as anything that's cyclical and commodity based. Like cyclical meaning Caterpillar, which is basically makes a lot of money when the economy is doing well and then loses a lot of money when we're in a recession. And other cyclical stocks include all commodity companies except for gold. Okay, and value-based ETF funds might help as well, or value investments. And all you have to do is look at the 13D filings from Warren Buffett on a quarterly basis. The last one was released in November, which shows what he owned as of September 30th, which includes Apple, which is 40% of his portfolio. It's high, I know. He also owns Coca-Cola and many other companies with decent relative dividend yields. Yeah. So value investors tend to do better during recessions. Okay. Next up, Susan. Susan, how are you? That's you, right? SF. Susan wrote, "What a good way for people to start their web presence over?" Or what's a good way for people to start their web presence over, especially for those who are younger or any age really, who previously have not been very careful about what they put on their profiles? Yeah, a couple things you can do. There are reputation websites that you can hire that will get rid of negative stuff written about you online. Or what you can do is you can get a VPN. I use Express VPN product, and you can just go to different log in from different locations all over the world, and search for yourself with other keywords after. So if a lot of people to search on John Smith fraud, then that might come up in the rankings first. Yeah, get all your friends to also do different searches on you, for example, if there's negative stuff written about you as well. Yeah, you can also call companies and ask them to take down certain things written about you as well, if there's something on a legacy website about you. Yeah. But in terms of you, I mean, you've got an amazing opportunity ahead of you with the chocolates that you create. So maybe one day you can come onto Zoom and show all my students, like I think you did last week, all the amazing chocolate products you create. I would start doing TikToks on making those chocolates because it looks so amazing. It's free marketing for you as well. Yeah. Okay. All right. And then next up, Mike Flynn wrote, Steve Cohen Steve Cohen is the founder of SAC, Stephen Alexander Cohen, a big hedge fund that the government shut down. And his offices were up in Connecticut, and I went up there to visit with the firm before. Scary. Yeah. I was scared when I went there because when I walked in, they interviewed me, I walked in and I had to walk through a shark. The shark was, you know, that weird art, which is in glass. It was a shark cut up in pieces. I had to walk through that as I walked through the building. Yeah. Yeah. But you wrote, Steve Cohen said that playing poker was the biggest determinant in his learning to evaluate risk in investing. Oh, interesting. Yeah. So some hedge funds issue poker theory books to new hires. Can poker help you investing? It makes you more cognizant of risk management metrics, and it shows that you have an understanding of mathematics as well. But what I would say is being able to read people, okay, the qualitative ability to read people is important, especially when you're interviewing or meeting with CEOs of companies you want to invest in. And by the way, you can always tell when a CEO is lying when they move their lips. Yeah, that was bad. Yeah. No, all joking aside, I worked at a big hedge fund years ago. And what they did was they hired 25-year CIA and FBI veterans to teach us how to tell if people are lying. And this was really helpful for me because there were a lot of CEOs I met with that were lying. And I can now watch somebody being interviewed on television and tell if they're lying. It doesn't always work, but I'm going to tell you the rules. Here we go. Number one, and there's 4 rules, and you want at least 2 or 3 of the 4 to be true, and it's not always accurate, but here we go. Number 1, if you ask somebody a simple question, like a yes or no question, and they ramble, there's a chance they're lying. Like a kid, for example, did you steal cookies from the cookie jar? I mean, how could I? I mean, I'd have to move the ladder that's over there, which was heavy for me to pick up last night when I moved it over there to get the cookies. That sort of thing. So that's number 1. Number 2, if they break eye contact, okay? But it depends on your demeanor. Like for me, you know, I look down a lot, just the way I am. But if you ask somebody a question and they break eye contact more than usual, there's a good chance they're lying. Watch for this when you see an athlete interviewed on television who's being asked, do you want to re-sign with the company next year? 3rd, as my son Andrew used to say. The 3rd one is, oh yeah, the 3rd one is if you start shaking your leg a bit, like you look down and see somebody shaking their foot, as long as they haven't had too much caffeine, which I certainly have this morning. Yeah, and that's what those lie detector tests kind of test for as well. The 4th way and final way is if they touch their face or cover up their mouth, okay? Now, if that's somebody's demeanor to usually do it, obviously it's a moot point. That does not apply. But quite often when somebody is lying, they'll cover their mouth. Yeah. So look for these. Yeah. Okay. All right. And I'm going to open up, I think I might open up Zoom. You know, I'll open up Zoom right now if you guys want to get on Zoom, and I'll keep answering questions. Keep typing your questions here on YouTube chat. I'll keep answering them. But I'm going to open up Zoom as well. And for those of you that want to join Zoom, what you do is you go to Haroun or Haroun, MBA.com. My name is pronounced Haroun. It rhymes with baboon. Now you never forget. Zoom. Okay, so HarounMBA.com/Zoom, all lowercase. Okay. And then you're going to click this button here. And then you're going to click here on allow just to launch the meeting. Okay. And while this launches, this is me buying time, I'll answer more questions. Okay. All right. Next question is, I love the background quote by Steve Jobs. Bless you. My best regards from the United Arab Emirates. Awesome. Thank you. Thank you. And I love visiting UAE. I raised a lot of money from Dubai, actually. Okay. And one of the reasons I got those meetings because my Middle Eastern background too. Okay. So if you guys want to join Zoom, go for it. I see Jean-Marco here. Okay, good. So I'll admit Jean-Marco. And then what I'll do is I'll answer questions as well. Let me get myself off the corner. All right, hold on a second. Go over here. There we go. Here we go. Great. Excellent. Jean-Marco, how are you?
What's up, Chris?
Good to see you, man. Good to see you. How's life?
It's good. It's good.
Excellent. So Jean-Marco is based in Dominican Republic. He's one of my Platinum MBA students. Started last June. Great guy. He started a company called Domway, which means Dominican Way, which is a logistics company. It's basically like FedEx, but based in the Dominican. Yeah. But he's going.
Look at this. Look at what I found. The first company I told you, this is the uniform.
Oh, that's one of your companies. Oh, cool. And
the first one. The first one. This was the uniform.
Oh, cool.
It was a black complete with the logo there.
Nice.
Yeah.
I love black.
Yeah.
You're dressed like me today. Usually I wear a black shirt. Yeah.
Yeah. You're in.
Yeah. Excellent. It's good to see you, man. Good to see you.
Yeah, you too. You too.
Excellent. Let me know. Do you have any questions?
Real quick, in Excel,
Yeah.
you know the part when you put like a number and then you follow it by a number, like 1, 2, when you select those two cells with your mouse and then go down, you know that follows a certain pattern, like 5, 6, 3. Can we do that with the keyboard only?
No, you could. So all you do is in the bottom right-hand corner, after you type a number in a cell, you can drag it down to copy, and then it will actually fill in the pattern for you. Yeah.
Okay.
Yeah. Cool. Looks like Susan is joining too. Awesome. Excellent. Cool. All right. So while you guys are joining, I'm going to go back, answer a couple more questions. I'll be right back. Okay. Let me go back to full screen, Chris. All right. Here we go. Awesome. Okay. Next up, the Berlin wrote, Turkey nears 20,000 deaths from the earthquake. Jesus, Lord, praise the people in Turkey. Amen. Yeah. It's very, very sad. Okay, and next up, Eric wrote, how often does rebalancing a portfolio occur? Should we rebalance every time based on the VIX? No. So I would be very long-term focused. And I would have your portfolio have at least 20 stocks in it, no more than 5% of your investments in any one particular stock. And from a risk management perspective, I don't recommend having more than 20% of your portfolio in any one sector like technology, industrials, healthcare, financials, etc. Yeah. I would just use the VIX as an indication as to when to buy more risky assets, right? Like you might, invest in the IWM, which is the Russell 2000 index. Yeah. Or buy calls on it. Yeah. When the VIX is above 70 or 80, you will make money, I promise you. If you're long-term focused, maybe by leaps. Yeah. Okay. And then Eric wrote, what percent of portfolio should be in riskier assets if I plan to live 200 years? What about planning for 10 generations? Yeah. So an old school of thought is, in order to calculate what percent of your portfolio should be in riskier stocks, you take 100 minus your age. So if you're 75, 100 minus 75 is 25. That means 25% of your assets should be in riskier growth investments and 75% in value or cheaper or less risky investments or government bonds that are AAA rated. Yeah. But the problem with that is there are people on this webcast that will live to 150. So it's kind of a moot point at this point. In fact, since the 1950s, the average global life expectancy is 26 years longer than it is today. So for me, I'm 51. I turned 51 February 2nd. So that means I'm 25, I guess. Yeah. And the average age of somebody starting a company in America is now 51. Yeah. Okay. All right. And then Eric wrote, what do you see as the mega trends for the next 10 years? Definitely artificial intelligence. I would say anything clean tech oriented. I think what happened with Putin invading Ukraine has led to a lot of governments wanting to invest in alternative energy sources. So I would think anything battery operated, anything clean tech related will probably do well. Yeah. Okay. And then I think AR. Eventually AR will be something that you want to invest in. Certainly not the Oculus product, which is more VR based, which is garbage. Probably, if anybody's going to figure out AR, it's going to be Apple. If you do a search on Apple patents, it's publicly disclosed what their AR product is going to look like. Yeah, and it should be coming out this year, according to people familiar with the matter, which means the media. Yeah, and the media always gets a hall pass when it comes to insider info. Yeah, they never reveal their sources. Yeah, as long as they don't trade in that stuff, of course. Okay. Next up, since no one asset should be no more than 5% of a total portfolio, Shouldn't swing trading stocks be one of them? Yeah, I'm against any sort of trading, period. Yeah. I think the only way to make money is to be long-term focused. Otherwise, you get fooled by randomness. Yeah. And there's a reason why we can't find the names of successful day traders that have been successful for a long time, because they don't exist. That's just like saying, what are the names of the most successful, slot machine players? Although I'm very good at slot machines. Those one-arm bandits. Okay. Next up, I've got, and again, if anybody wants to join Zoom, just go over to harounmba.com/Zoom to join there. I see a couple of people there. I'll get to Zoom in a second. And Brian, if you want to join us again, please do. Yeah. Okay. Eric asked, did the plants from class ever grow? If not, why? You're not CD. Yeah, so in one of the classes, I was doing a case study on, I think it was on Warren Buffett or portfolio management or planting a seed, a mustard seed, which is biblical, to show what thinking long-term will do. I grew that mustard seed plant till it was this big. I left it by the window. I forgot about it and it died. Yeah. Okay. All right, but we are planting palm trees now on my property, which is fun. 3, 1 for each kid. Okay, Eric wrote, in a world where the news does what the news does, what is your opinion on rolling T-bills to keep my powder dry till the news doesn't make me woozy? Yeah, I don't know what that means. Maybe you're talking about you invest in T-bills and then once they mature, you reinvest the money, kind of like reinvesting dividends. Yeah, yeah. If you're going to do that, make sure it's no more than 5% of your portfolio. Okay, next up, you stated endowment funds have different overseas investment rules. Can you please explain? Yeah, pension funds are like that as well. So there are different tax mandates for a lot of international endowment funds and pension funds. And that's one of the reasons why a lot of US-based money managers have offshore accounts for them to invest in. So for example, when I ran my hedge fund years ago, I had what's called a master feeder. So I had my hedge fund, Haroun Capital Management. I had a domestic vehicle feeding into it and an international vehicle in the British Virgin Islands, where I had a company there as well and a board as well. And we never give tax advice. That's what my lawyer, Jim Grant from the Securities Law Group here in San Francisco told me. Never give tax advice, but you want to give the ability for people to invest offshore if they want to. It's usually for international folks. So for me, for example, I had ABN AMRO that invested a lot of money in my hedge fund offshore. They're European based and they didn't want to be subject to US taxes. Yeah. Okay. All right. And then Ya from Colorado wrote, what are your thoughts about the YOLO group? Yeah, so YOLO standing for you only live once. And that was a term, I think, coined by Linda Lazarus, who's a reporter for the Globe and Mail. I interviewed her on my webcast a couple of years ago. You can go back and watch that if you want to. I certainly respect it. During the pandemic, a lot of people were like, you know what, man? Your time is limited, so don't waste it living someone else's life. And they want to live their lives on their own terms. And just not be part of the corporate furball, so to speak, or fuzzball, whatever you call it. And so they started creating their own side hustles. I think it's a beautiful thing. I think it's a beautiful thing working for yourself. And in my MBA program, I help you all start your own companies if you want to in the 3rd semester during the Venture Capital Bootcamp. Yeah. There's nothing worse than working for corporate bullies, which I've done before. I've been bullied at work. Yeah. And those are the people that usually peak in high school. And they're a bouncer somewhere. Yeah. Okay. All right. Eric wrote, what are the mistakes that others have made while trying to raise capital from high net worth and how to avoid them? Yeah, the biggest mistake I would say is not bonding first. Like a rookie mistake in business is in a meeting, jumping right into business. That's not how the world works. You have to bond with people, find something in common as well. Yeah, always. Doesn't matter if you work in sales, portfolio management, or if you're a startup manager. You have to be able to sell yourself and bond. And the best entrepreneurs and the best CEOs in the world have that in common. They're great salespeople. They can bond. Always bond before business because your network is your net worth. And relationships are always more important than product knowledge. Yeah. Another mistake people make is they're not ready for the meeting. They didn't bring their laptop with their Excel model or financial model on it, which I teach in my MBA program. Or they don't think about the problem with the industry and the solution, which is their product. or they don't know the size of the total addressable markets. Yeah. Okay. And Eric, you can always go to E31 to do the venture capital bootcamp, and you'll see there I give you 25 templates for 10-page slide decks for investors. Yeah. Okay. And then the Berlin wrote, Chris, since the VIX is down, do you see more volatility in crypto? I see a hell of a lot more volatility in crypto. Absolutely. Absolutely. You know, countries are either going to make it illegal, you know, left-wing countries, or they're going to regulate more right-wing countries like the United States. And so there's going to be a lot of uncertainty in that area. I think that some sort of regulation is a good thing. It protects us. You know, before we invest in publicly traded companies, by law, companies have to write these big S1 investment offering memorandums. And this is a case study we do in my MBA program on the Meta IPO from 2012. And so SEC.gov mandates that investment bankers and lawyers document all the risks in these things. That doesn't exist for cryptos. I would love to see some sort of documentation that protects investors when it comes to, you know, cryptocurrency companies disclosing material risks. There's so much fraud out there. Yeah. And it looks like the SEC is going to be overseeing cryptocurrency regulation and not the commodities exchange anymore. And that's a good thing, because if you have a commodity, basically the legal requirements are this versus this for the SEC. More disclosure is better for investors. Transparency builds trust. Okay, Eric wrote, what do you consider in a business plan that is global in scope? Yeah. So number one, I would think about your indirect distribution channel. So direct sales, which we covered in the first finance and accounting lecture, FA11. Direct sales means you're selling directly to customers. But there's a lot of money you're leaving on the table if you don't use indirect distribution channels. And every industry is different. For me, I distribute my product. One of my distribution channels globally is through Rakuten, great Japanese company founded by Mikitani-san. If you're in the industrial sector, like I think you are, you might want to partner with companies like Grainger, ticker GWW, or Fastenal, ticker FAST. But always pay attention to indirect distribution channels, especially overseas, to sell your product. Yeah. The margin structure will be lower because somebody else is taking a cut, but it's money you might not have made otherwise. Yeah. Okay, and then Denise wrote, I agree, ChatGPT is hopelessly full of errors, but it's interesting. It is fascinating, but it is confidently wrong all the time. Yeah, but it's so good if you want to write, oh my God, a Valentine's Day card. Okay, February 9th, thank God. Okay, February 14th, note to self, I have to get my wife flowers. Okay, and instead of buying a Hallmark card, I'll use ChatGPT to write it for me. And the reason why I kind of freaked out about this was because, okay, I'm an idiot and I'm fully transparent. But when we moved to the Bay Area in 2005, Andrew, we had our first Mother's Day for Christine, my wife. And because I'm an idiot, I didn't know what to buy her for Mother's Day. And so she was she's amazing. She's the best ever. But she was a little bit cold on Mother's Day to me. And I said, what happened, honey? What's going on? And she said, well, for my first Mother's Day, I know she likes Dr. Phil. She goes, for my first Mother's Day, you don't buy me a book, which I did, called How to Raise Kids by Dr. Phil. And then she said, secondly, it's the only book that's been sitting on the beeping coffee table in front of us for the past 6 months. So that's why I get kind of scared when I think about, yeah. Laugh at me, not with me on that one, please. I was an idiot. Yeah. Okay, and then Omran wrote, love you, man. Thank you. I love you too. Okay, and then Manas wrote, why is Coinbase such a crappy company? And why does CNBC recommend it at its peak? Are media companies biased? Yeah, I don't know why CNBC did so. Maybe it was because the CEO was basically pitching it. Or maybe it was a fund manager that already owned that stock that was pitching it. Yeah. I think it had good intentions. I met with Fred Ursum, who's the founder a number of times of Coinbase in my office. Actually, I had him come to a bunch of my conferences in my office in San Francisco when I worked in venture capital. He's a good dude, confident guy. And he worked at Goldman as well. Yeah, they have a decent management team. They do. Yeah. Yeah. And for more details on Coinbase and why they did a massive convert, a multi-billion-dollar convert, you can always do a search for Coinbase on my YouTube channel, and I go through that in a lot more detail. Yeah. Smart in hindsight. They raised a lot of money. Okay. All right. Next up, I've got, let me go over to Zoom, see if there's got people. Okay. We got a couple people waiting. Okay. I'll admit you guys, and I'll come back to you in a minute. I just want to get through a couple more questions. Awesome. Thanks. Okay. Next up, I've got Alexander, who wrote, "Good morning, Chris. Good morning. It's always a pleasure to hear your teachings. Gratitude is the word." Thank you. And God bless you. Thank you. Thank you. I love doing this. It's fun, man. Yeah. I don't have a job. I have a passion. Okay. Next up, Manas wrote, Elon is not running Twitter as expected. The blue tick is not working. Congress is upset. The EU is behind him. And Twitter files are making him a big target. Your thoughts? Yeah. I think he had noble intentions initially when he wanted, and still does, when he wanted to take over Twitter. I think his concern was that you want all viewpoints to be heard, right? In a democracy, you want to hear from the left and the right. And his perspective was that Twitter was too much this way, and you didn't have any centrist viewpoints, which is what he kind of is, I guess. I think it's healthy in a democracy to have differing viewpoints, as long as they're not insulting. Yeah. Yeah. Okay. Adiposi, great to see you. Adiposi from Nigeria. He's in my MBA program, started last June. Great to see you. He and his wife started a company, a handbag company, which is awesome, called CEO and CEO Handbags. And that's the initials of his wife as well. On the very first webcast I had Adiposi on last June, he said something very prophetic, which is, with pain, you find your purpose. And it's so true. You know, a lot of people are going through pain, working for people that are a pain in the butt, and they're being mistreated and they're frustrated. But with that pain, they find their purpose, because that forces them to quit and get a better job, something I help my students with, or to start a company. Yeah, and put your dent in the universe. Remember that quote. Yeah. Good to see you, bud. Okay. And then next up, we have Makiri wrote, greetings, Chris. Thanks for sharing your wisdom. My pleasure. Do you have a course on researching stocks? Yeah. My MBA degree program talks about that in a lot of detail. I provide you with all the tools you need to invest in any asset class. So just go to my website, harounmba.com, to check it out. I'll show you quick. So just go to here, Haroun, here we go, harounmba.com. And then if you scroll down, you can learn more about the program and all that stuff. Yeah. Or click here to access all of my courses. I guess I should zoom in a bit here too. Oh, yeah, right here. Yeah. Like this one here, you could start today if you want. Yeah. Or not. All right. I see there's a ton more questions here. What I'm going to do, if you guys are in my silver, gold, or platinum program, save those questions for our office hours later today, or our one-on-one meetings. But what I want to do now is I'm going to go over to Zoomy and say hi and see if anybody has questions on Zoom. Okay, admit. Okay. And I will start my video here. All right. All right, let's go to Rosa. Rosa, how are you? How are you? And you have to, it always mutes you at first. So please unmute. Yeah. Oh, sorry. Yeah, I can't, it might be me. No, that was my fault, not you. That was my fault. I couldn't hear you. How are you?
I'm well. Thank you so much for having this office hour.
Yeah, my pleasure.
Really appreciate it.
Of course. I like your backdrop. That's cool. So tell me about yourself. Where are you based? What career are you in? And please let me know if you have any questions so I can humbly help.
Thank you. I'm very humble as well to be in everyone's presence here. I'm based in Vancouver currently. I've had work experience across the world. I'm currently in the architectural, engineering, and construction industry. I am a consulting engineer in a very niche subject matter called architectural acoustics.
Okay, cool.
In fact, I took your interviewing course on Udemy, and I got my dream job with one of the largest AEC firms in Chicago.
Awesome.
So thank you very much for that.
Of course, congratulations.
I think Udemy invited me to put together a video to encourage your other students. I think you guys were having a celebration for your success on Udemy for helping so many people.
Oh.
And I wasn't able to join that celebration, but I did
thank you.
record a video.
Thank you. God bless you. I appreciate that. Thank you so much. Thank you. Wait a second, Rosa. That was back in 2017, right?
Yes.
I remember that. I gave a keynote at Udemy's offshore in Southern California in January 2017, and they showed your video, and you had a hoodie on, right? With that.
That was my first few weeks in Chicago.
God bless you. Thank you for that. Oh my God, it's been. I remember you. That was 6 years ago. Goodness, thank you.
Yeah.
God bless you for that. I remember that well. Thank you.
I thank you for helping me make that happen. And
all right, thanks. All right, let me go over here. Okay, and I see there's a number of questions here within YouTube. Please save them and ask me them next week, or you can ask me them today on the Silver MBA office hours. And for those of you that signed up for my Silver MBA, just go to the first lecture in the curriculum, and you'll see the link for the Silver MBA weekly office hours. It's every Thursday from 10 to 11 Pacific time. And for those of you in my Platinum or Gold MBA program, you can join that one, as well as the 2-hour office hours that starts today at 11:20. That goes from 11:20 till 1:20. And for those of you in Platinum that have one-on-ones, I look forward to doing our one-on-ones together today at 1:30 p.m. So God bless you all. Click like, subscribe. That's what my team always asks me to say. Again, if you've asked questions, if I didn't get to them, just copy them and ask me during office hours for Gold or Platinum or Silver, or ask me next week. Take care. And I'm going to end this webcast with a video that I licensed. It's a Steve Jobs interview from the Silicon Valley Historical Association that is life-changing. God bless you. Pray for those, please, in Turkey and Syria. And I'll see you next week. And thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.